Hello and welcome to Startup Central. I'm Nayantara Rai. This is the only show of its kind on Indian television dedicated, of course, to startups, innovation, technology, disruption. Basically, if it falls under the gambit of the new economy, is going to be here on your channel ET Now every weekday at sharp 6 p.m. Ladies and gentlemen, like all the stakeholders of the community that we get on the show, the team that puts the show together, the Startup Central team, thrives on constructive criticism. So keep writing into us to tell us how to take the show to the next level. Our email address right on top, suc@etnow.tv. It's 1st of July, which means that there will now be a 1% tax, TDS, that is, on digital assets. We're talking about crypto here. We're talking about non-fungible tokens or NFTs. This was announced by Finance Minister Nirmala Sitharaman in her union budget speech on the 1st of February in the floor of Parliament. A lot has been said about this tax. How is it actually going to function is something that we're now going to be discussing right here on this edition of Startup Central. And joining me, one of the largest crypto exchanges that we have, CoinSwitch Kuber, heavily backed by VC firms as well. The CFO right here with us on this edition of Startup Central to help us understand and the impact of this on all of you that continue to invest in cryptos at a time, of course, when we are seeing so much volatility and a meltdown of such. The world, of course, is in a risk-off mode. Joining us now is Sarmad Nazki, the CFO of CoinSwitch. Thank you so much for being with us today. So let's get straight down to it. 1% TDS. It goes live. Are all your algorithms, backend infrastructure all in place?
Yes, I think all exchanges had a downtime in midnight, but now we are live and it's working perfectly well. So good to go from our side.
Okay, good to go from your side. The CBDT had come out with certain guidelines on how exactly it's going to work. Can you explain to our viewers how it's going to work? The 1% TDS, is it going to be deducted by the exchange? What happens also if there's a peer-to-peer activity?
Sure. So if you go back, right, in the budget, the TDS and the 30% tax came into play, right? And subsequently, the CBDT was very collaborative, right? The industry spent a lot of time working with them. They heard our side of the story and then came up with solutions which are practical to implement and have a balanced view. Currently, what will happen now is, if you look at the section per se, the onus of deducting TDS is on the person who's crediting money, right? So, for example, if selling a VDA to you and you are paying me, the onus of the TDS is on you to be deducted and deposited to the government. But for the sake of, for the convenience of the industry and consumers, the CBDT has now notified rules where if you're buying on an exchange, the exchange will be able to deduct TDS for you, right? So if you are buying and selling VDAs on an exchange, you don't need to worry about the TDS portion. The exchange will deduct it, deposit it with the government under your PAN number, and quarterly and on a regular basis, you'll get reports to show you the amount that has been deducted and deposited with the government. However, I think to your other question, that if you're doing peer-to-peer transactions where no exchange is involved, then before you pay the other person, the onus of deducting the TDS is with you and depositing it with the government, and there is a certain process to go through that.
Okay. Are you familiar with what the process could be?
So generally, right, if you're deducting tax, you need to have, generally consumers are know about PANs, right? But there is also another concept called TAN, right? So if you're deducting tax, similar to a PAN process, you need to go through a registration, which is a lot of steps, right? So better probably to do this through an exchange so that it becomes convenient for people.
Okay. So it is going to be TDS peer-to-peer, otherwise go through an exchange or do the paperwork. Now, having said that, the other question I wanted to ask you is, are there any exemptions at all for the TDS?
There are certain exemptions from an amount standpoint. So if you've done trading of about 10,000 rupees in a year, there is no TDS applicable to you. But post that, the TDS comes into play, and this amount is for the whole financial year.
So you tell us, you're one of the largest crypto exchanges that are there in the country. If there's an exemption of up to 10,000 rupees in a financial year, is that for most of the traders that you have on the exchange doing activity? I don't mean just day traders, but all kinds of investors. I'm taking a leaf from the fact that, Bitcoin, however volatile it is around $20,000.
Yes, I think Nayantara, to be honest, it's a mixed answer, right? Because the market cycle and the composition of users changes, right? There are people who trade a lot, and then there are also people who are early in their journey, right? So probably maybe if they're new to the asset class, they spend a bulk of their majority time early on understanding the asset, right? And but trading for very less volumes, right? Till they get comfortable with it. So this gives them some relief, but eventually everyone will fall into that bucket of 1% TDS. And I think it doesn't really matter because TDS is more like an advanced tax collection mechanism, right? So irrespective, you eventually need to go and pay taxes on your income at the end of the year.
I'm guessing all of this is also for the government to increase its tax net, to know who all it is that are investing in cryptos. We often talk about the low penetration of taxes in the country. So you will have to share that
Absolutely.
information with the government that so and so is investing. This is the tax we've collected, and that's a great way for the government to increase its tax net too.
Yes, absolutely. I think it does create a trail for the government to know because once you have centralized exchanges, right, deduct TDS and then also connected to a PAN number, all of those filings go to the government, right? So they're able to trace transactions of who bought and sold the transactions, or VDAs, sorry, and then eventually link it up to their income tax returns.
So you discussed about the 1% TDS. Now to the other one that was also part of Finance Minister Nirmala Sitharaman's budget speech. 30% crypto tax. How's that going to work?
So how this works, right? For example, if you bought a VDA, assume for 100 rupees, right? And then eventually you sell it off for 200 rupees. The profit for you is 200 minus 100, which is 100 rupees of profit, on which you need to pay 30% of taxes, which is 30 rupees.
But the way the crypto market is moving right now, there will be those who will be making losses. Just look at what has happened. The price action
Yes.
that you're seeing, the crypto world's market capitalization fell from $3 trillion to less than $1 trillion as well. So even if you're making losses, you're saying this 30% tax has to be paid. And by who?
Yes. So generally, if you see in income tax, right, you have a bunch of rules around what can be set off around and profit or losses against various asset classes. As far as the VDAs are concerned, what the government is notified is if you have losses, for example, from sale of VDAs, right, it can't be set off against your business income or salary, maybe. But I think if you have losses within other VDAs, those can be set off. There are certain nuances to it on which the jury is still out, that if you're buying a Bitcoin, a profit loss, can it be set within those cryptos? Or can, for example, a Bitcoin loss be set off against Ethereum? So I would request your viewers to consult their experts on taxation for that while they figure out the returns.
So that clarification hasn't come in from the government that if you are losing money in crypto trading, whether you still have to pay tax or not. That clarification you're saying is not out as yet.
No, sorry. If you have a loss on a transaction, which is, for example, if you bought something for 100 and sold it for 70 rupees, then you have a loss. You don't have any tax to be paid on this particular transaction, right? But what happens then that over a period of 1 year, right, you would have done multiples of those transactions, right? Now the question comes, maybe 60% of trades you made profits on those, right? And the 40% you have losses. Can you actually set off the loss and the profit amongst themselves and then pay taxes only on the net portion of it? To that extent, it is allowed, but it cannot be set off against any other income or loss that you have.
So we wait for that kind of a clarification. And now tell me something. We are talking at a time, like I said, so much volatility. The world is in a risk-off mode, especially when it comes to cryptos. With the US dollar strengthening, there are many experts who believe that crypto prices will only head south. I don't want to get into any of that. But what I'd like to understand is, what has been the impact of that on your trading volumes so far?
Sure. So if you see global macroeconomic factors, right, a lot of central banks have been raising their interest rates, which basically has led to a reallocation of liquidity in the markets, right? You see a lot of changes happening in all financial markets, be it equities, debt, or otherwise, right? Which has created, changed the liquidity dynamics in the market and hence impacting prices. Cryptos have also been impacted because of that, where you see a steep decline in volumes. I think the trends, at least in India, are similar to what you see globally. The volumes are down at this point in time.
How much are volumes down by? 20%, 30%, 40%?
I think the industry is so dynamic, right? Because India, like other traditional markets, right? It just changes on a day-to-day basis. But typically, I would say I think for most people, maybe it's been about between 30 to 50% at least.
You see, there's been a 50% drop in volumes, and has that been since the crypto tax was first talked about in the finance minister's budget speech on 1st of February, or more recently the 50% drop because of the price action?
Neither, to be honest, I think it's very difficult to say what caused it, because when all of these things happened, right, everything just happened simultaneously, right? The tax thing came into play, but then global macroeconomic conditions also started changing, right? So it's very difficult to isolate. Is it because of tax, or to what extent? Is it because of the global conditions, to what extent, right? All of them have had an impact, but difficult to say what is causing it most at this point.
Okay. Whichever way you look at it, ladies and gentlemen, there is a new tax, TDS, 1% on crypto trading. There's also a 30% tax on crypto trading. And we try to give an explainer on that with CoinSwitch. Thank you so much for joining us today.
Thank you. Bye.